Well, good evening, everybody, and welcome back to Strongman Personal Finance. We are starting early. I decided to skip the gym today because I kind of feel like crap. So, in this awesome live stream, we are going to cover the earnings of Google, Meta, and Microsoft, and we're going to have a lot of fun doing it because when I checked before I went live, I saw that some cheeks were clapped today. Some stocks are actually going down in vertical lines and some are going up in vertical lines. So we're going to start with Meta first and foremost because everybody loves freaking Meta. So we got Meta Platforms Incorporated. It's down almost 9% in the aftermarket. What happened to Meta? Is it cooked? Is it over, boyo? Well, let's go ahead and dive in. So I pulled up the third quarter 2025 results. We had a strong quarter for our business and community. Mark Zuckerberg said, Meta Superintelligence Labs is off to a great start. Meta Superintelligence Labs. And we continue to lead the industry in AI glasses. If we deliver even a fraction of the opportunity ahead, the next few years will be the most exciting period in our history. All right, so let's look at the actual numbers instead of CEO fluff speak. So year over year, and I'm sorry, the way it's set up, I can't zoom in that much. Revenue's up 26% year over year. So that's incredibly good revenue growth year over year. It's now for the last quarter, $51.2 billion. That's a lot of revenue. However, costs and expenses are up 32%. That's not surprising with the amount of money they're investing into infrastructure. And their income from operations is up 18% year over year for total income from operations of $20.5 billion. Pretty solid growth in revenue. Obviously, some expenses are growing pretty fast, but still pretty impressive operating profit growth, okay? Their operating margin is 40%. That's their profit from operations before interest and taxes. This is where it gets funny. Provision for income taxes, almost $19 million. $19 million of taxes. What? Their tax expense year over year is up 788%. Is Meta getting a special tax assessed on them? We'll see. Their effective tax rate is 87%. The government, it's literally communism now, basically. And of course, because they had this huge tax hit, their net income was only $2.7 billion compared to $15.6 billion. However, probably would have been a lot higher had this one-off tax charge not been here. So diluted earnings per share, massive collapse of $1.05. Now, is this the end of Meta? No, it's a adjustment to an asset account that affected the tax expense for one quarter. It's an accounting adjustment, but we'll see more. We expect a significant reduction in our U.S. federal cash tax payments for the remainder of 2025 and future years due to the implementation of the One Big Beautiful Bill Act. So they're saying they're going to be paying less cash for tax going into the future. However, the implementation also led to the recognition of a valuation allowance against our U.S. federal deferred tax assets, reflecting the impact of the U.S. corporate alternative minimum tax. Now, this is a tax that applies to huge corporations, like massive corporations. So, like in my professional experience, I don't deal with this. So I'm not 100% familiar with exactly how this works. I used AI to look it up. And you can always trust AI, bro. You should always check the sources, by the way. And when you type in U.S. corporate alternative minimum tax, it says the U.S. corporate alternative minimum tax is a 15% minimum tax that applies to the adjusted financial state income of large applicable corporations. This tax was established by the Inflation Reduction Act of 2022. So it was established a long time ago. So I said, okay, I mean, if it was established in 2022, why are these changes happening now in this quarter? That's weird. You know, so this applies to corporations that have, basically looks like profits that exceed 1 billion for the last 3 taxable years. I don't do taxes for those type of corporations, okay? So the only thing I could think of is that some guidance from the IRS made them finally recognize it. So it seems like the alternative minimum tax for corporations was passed back in 2022, But people were unsure. They didn't really know. And then the IRS started issuing guidance. This is what the IRS does. Usually laws are passed, and then there's lots of questions about the laws. And then the IRS releases guidance. And what it looks like is what happened is that they finally got some clarification on how this tax was going to affect large corporations. And once they got that confirmation guidance, it's the only thing I can think of, they decided to basically reduce the deferred tax asset on their balance sheet. A deferred tax asset is what the company is guessing they will save in taxes in the future based on differences between financial income statement profits, GAAP, and what is deducted on the tax return. There are differences between book financial statements and tax. Some things you can deduct, some things you can't. Sometimes you can take accelerated depreciation on tax. You can't do that on books. And that generates these deferred tax assets and liabilities as temporary differences. So this is the only thing I could think of. Okay. So I guess this new alternative minimum tax, they finally got some guidance on it. And when they were finally sure, they made an adjustment to a deferred tax asset account. We'll go look at the balance sheet, see how it impacted them. But yeah, they basically took a big accounting tax hit. Okay. Not a cash outflow, but a non-cash charge. So as a result, the third quarter 2025 provision for income taxes includes a one-time non-cash income tax charge of $15.93 billion. Excluding this one-time charge, our third quarter 2025 their effective tax rate would have been 14% without it. Net income would have increased by $15.93 billion to $18.64 billion. So if they hadn't taken the charge, their income, their profit would have increased divided by 15.68. Their profit would have increased 18%, which is in line with their increase in income from operations. And obviously their earnings per share would have been 7.25, which is obviously an increase from 6.03 in 2024, the same quarter. So it was a non-cash charge related to tax assets on the balance sheet. Now, this generally means that you're going to save less taxes in the future. They thought they were going to save a lot of taxes in the future. Turns out they weren't going to. So it is writing off an asset, and it is projecting that they'll be paying more taxes in the future. That's my understanding. All right, now let's look at some other stuff. It's a one-time thing. Daily family daily active people was up 8% year over year to 3.54 billion. That's all their freaking apps. Instagram, trash. Facebook, I use Facebook. And what's other freaking apps? I'm forgetting off the top of my head, but they got a little family of apps, and it's so adorable. And they're still increasing users. I mean, there's 8 billion people on the planet. Ad impressions increased 14%. Yes, they're throwing freaking ads in your face because AI, bro. Average price per ad increased by 10%. So if they're throwing more ads in your face and they're charging more for ads, yes, their income's going to go up. How long this can go on, I don't freaking know, but it's working so far. Revenue increased 26%, blah, 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 blah. Cost increased faster than revenue. Capital expenditures were $19.37 billion. Let's go look at prior quarters. $19.37 billion. I wonder if they've already updated this. No, they haven't yet. Usually stock analysis is pretty good. Yeah, so look at their increase in capital expenditures. So back in 2020, their capital expenditures, in September, in that quarter, or the same quarter of 2020, were $3.6 billion. Last quarter, they were $16.5 billion. This quarter, they were $19 billion. So they're just plowing money. They're plowing so hard, baby, into, building out their data centers and AI infrastructure and all that good stuff. And hopefully it pays off. We'll see. Share repurchases were $3.6 billion, and total dividend payments were $1.3 billion. And I wouldn't worry about their cash. They have plenty of cash and marketable securities. Cash flow from operations was $30 billion, and free cash flow was $10.62 billion. So let's look at their cash from operations in the prior quarter. So Last quarter, their cash from operations was $25.5 billion. This quarter, it's $30 billion. So I mean, they're massively growing operating, even quarter over quarter. They're growing operating cash flow. So they have all this money to basically plow into investments. Free cash flow, a little bit higher. I mean, obviously their free cash flow is starting to dip, but that's because they're investing in infrastructure. What you want to hope for is that the investments pay off. That's what you want to hope for. All right, headcount increased 8%. Are they actually hiring people again? Wow, look at that. 8% up year over year. Let's see. We expect fourth quarter total revenue to be in the range of 56 to 59 billion. How does that compare year over year to the prior year? 56 to 59. Okay, so fourth quarter, it was 48, and now they're guiding 56 to 59. 59 divided by 48. So they're guiding 22% growth in revenue on the high end. And then they're guiding, what was it? 56 divided by 48. 16% on the low end, roughly. So they're guiding for decent revenue growth year over year, but yeah, it's not a huge, it's still a pretty good guide year over year. I mean, it's the holiday season. So that's going to be their big revenue maker. Let's see. Our outlook reflects an expectation for continued strong ad revenue, partially offset by lower year-over-year Reality Labs revenue. Reality Labs. All right. We expect full year 2025 capital expenditures to be in the range of $70 to $72 billion. So they're guiding for even more capital expenditures. The low end went up by $4 billion. In 2024, their total capital expenditures were 30. They've doubled. They're basically doubling their capital expenditures from last year. Oh God. Holy crap. All right. We expect the set of investments we are making within our ads and initiatives next year will enable us to continue to deliver strong revenue growth. We'll see. Let's see. As a result, our current expectation is that capital expenditure dollar growth will be notably larger in 2026 than they're just plowing money. It's just like insane. Like you can't even fathom how much money they're investing. Okay. So even more, it's going to be, they're guiding for 70 to 72 billion in 2025. And they're saying it's going to be much higher in 2026. The growth driven by infrastructure costs, including incremental cloud expenses and depreciation. Okay. Let's go look at their balance sheet. So, I mean, like a solid quarter. I mean, you had that one tax write-off, but, you know, it happens sometimes. All right. R&D's up almost 50%. They're plowing money into R&D. Shocker. Okay, we know about the tax. Let's look at their balance sheet. Do they have their deferred tax asset on here? Where's it at? They have a deferred tax liability. Am I blind? Yeah, I'm not seeing like where they specifically list out the long-term income taxes. All right, so that increased a little bit. Let me go look at the cash flow statement. Hold on. Okay, yeah. So I didn't necessarily, maybe it's like lumped into other assets, or maybe I'm blind, but I see the long-term income taxes. That account went up by about 2 billion. Am I blind? Yeah, by about 2 billion. And then this other assets account went down pretty significantly. This could be it right here. This huge drop. This could be the deferred tax asset that they wrote off. You can see that huge. So if you credit something on the balance sheet, if you credit an asset, you got to debit something expense. So you can see the asset account went down on the balance sheet, and that debit went on to the income statement. So that's where I think it is. But you can see the add back here. You add back non-cash expenses. So they added back 19.8 billion of deferred income taxes because of that one-time charge. But their cash flow was extremely solid. So I don't think this changes. Like, if you're investing in Meta because you think they're going to win the AI race, this changes nothing. It was a tax adjustment. That's basically it. I mean, I don't think it's that. I mean, it's a big deal, but it's not that big of a deal. Where's Reality Labs? Income loss from operations. Reality Labs, $4.4 billion. Oh my God. Okay. Well, Reality Labs had some revenue growth. They had $470 million of revenue. Wow. Still a freaking clown show. Man, if there hadn't been AI, my hot guy, this company might have been cooked. Or they would have had to like really give up on Reality Labs. So overall, good quarter. I mean, I don't think the long-term thesis, if you like are buying this individually, I don't think it's changed personally. But the stock sold off, so whatever. Sell the dip. All right, so that's Meta. Are we still streaming? Yes, we are. Okay. Next, we're gonna move on to Google McDougal. See, I don't buy index funds, right? I just buy individual stocks that comprise index funds because I'm a genius, even though all these stocks are at the top of the index. Okay, Alphabet up 2.51% during the day and up 6% after hours. It had a $3.32 trillion market cap before the market closed. So you add another 6% to that, and Googly's been having a good year. Look at this. 44% year to date, 63% on the 1 year, and 262% on the 5 year. Personally, I don't think ChatGPT is going to take over Google. Being perfectly, I rather I use look at this. I use this. They have like an AI mode. Okay, I use this a lot. I like this. Oh, ChatGPT, and they can add even better stuff. I mean, you can go to AI mode here, and you can ask them the same freaking questions that you could ask ChatGPT. So, me personally, I don't think Google's cooked, bro. But we'll see. Maybe I'm wrong. All right, Google. Alphabet, excuse me. All right, revenues increased 16%. That's pretty good. Google search, another blah, 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 blah. Google services revenues increased 14%, reflecting robust performance across Google search, Google subs, platforms, and YouTube ads. Why have my YouTube ads not increased 14%, Google? Google Cloud revenues increased 34%. Wow. That's pretty good. Everybody's all about cloud, bro. If cloud goes up, it's amazing. Led by growth in Google Cloud Platform across core products, AI infrastructure, generative AI solutions. So that's probably why the stocks, I think I read that. The stock's going crazy because of the freaking Google Cloud beat expectations. Total operating income increased 9%. Operating margin was 30.5%. Excluding the $3.5 billion charge related to the European Commission fine, operating income increased 22%. So basically, the Europeans just stole some of your profits. And net income increased 33%. So very, very solid revenue growth. Very, very good revenue growth in Google Cloud, and very solid profit growth, which was hampered by the European Commission fining them pretty significantly. All right, here's the CEO. We delivered our first $100 billion quarter. Our full stack approach to AI is delivering strong momentum, and we're shipping at speed, including the Google global rollout of AI overviews and AI mode in search. I like AI mode. I use it. Let's see. I mostly use like Grok and AI mode on Google. Sometimes I'll use ChatGPT, but generally it's either Grok or Google AI mode. All right. The Gemini app now has over 650 million monthly active users. That's a lot of people. Google Cloud accelerated, ending the quarter with 155 billion in backlog. We have over 300 million paid subscriptions led by Google One and YouTube Premium, and I'm one of them. I am one of them. All right, so, okay, we know they're growing profits. Okay, I mean, look at the very good growth in profits. I mean, it's very typical of Google. YouTube ads. How much has YouTube ads increased? 15%. Where is my money, Google? Where is I need more money. Google search is up 14%, and Google Network is actually down a little bit. And then Google subscriptions is up about 20%. Google Cloud, like they said, is up, 31, 34%. Very, 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 very good growth on Google Cloud. Let's see. Yeah, look at the operating income on Google Cloud. It's about it was 3.6 billion. So their operating profit from Google Cloud is $23%. It's pretty solid. And of course, they had losses on other bets in Alphabet level activities, parent organization activities, not surprising. But like the other bets, those are long shots, bro. All right. So on September 5th, 2025, the European Commission or whatever announced its decision that Google had infringed European competitive law. Google's a monopoly? What? No. The EC imposed a $3.5 billion fine that we accrued in general and admin expenses. So an accrual means you expense it on the income statement, but you haven't paid the cash yet. All right, so changes to the U.S. tax law allow, amongst other things, immediate expensing of domestic R&D costs and accelerated depreciation on eligible capital expenditures, the effects of which are included in operating cash flows and the dividend program. They declared a quarterly cash dividend of 21 cents. Oh, my dividend, baby. Give it to me. Give it to me, daddy. All right, so let's go look at their cash flow statement. Yeah, whatever. Let's go look at their cash flow statement. I don't like how they have this set up. Okay, look at this. Gain on debt and equity securities. What is this? They had a $10.8 billion gain on debt and equity securities. Were they buying stocks, bro? Did they buy Tesla? I'm looking on their balance sheet real quick. Non-marketable securities is up pretty significantly. Marketable securities is up a little bit. Yeah, I guess they recorded some gains on some investments they had. Wow. Okay, so that definitely helped their profits a little bit. Let's see. I'm trying to see if there's anything else here. Deferred income taxes. Okay, they added back. It's a non-cash expense. 8.7 billion. But I mean, they still had like very solid growth in operating cash flows. 48 billion in one quarter. And then they invested 23 billion in property, plant, and equipment. How much should Meta invest in PP&E again? Hold on. Okay, Meta invests 19.37 billion. And Googly Moogly invested 23 billion. They're spending more. They're spending more than Meta, bro. Are they going to win? They spent 11.5 billion buying back stock and 2.5 billion on dividends. So far this year, they've invested $63 billion in capital expenditures, property, plant, and equipment. I mean, they're going freaking bananas, just like Meta is. They're spending more than Meta, it looks like. Okay, let's see. Yes, we saw the revenues. I don't know why we're looking at this again. Okay, I mean, very solid quarter. I mean, like I said, I guess the cloud was the big one there. They had very solid revenue growth, basically overall in everything. So Google's doing pretty good. Shocker. Wow, Google did well. Wow. Buy the dip, bro. So Google's vertical lining. Next, we have Microsoft. Oh my God, the king. The king is down 1.7%. Let's go see why. All right. Fiscal year 26 Q1. Can we have a regular fiscal year? Why do we have to have these crazy fiscal years? Can we just all use the calendar year, please? Anyway, Microsoft Corp announced its results. Revenue was $77 billion, an increase of 18%. Very good. Operating income was $38 billion, increasing 24%. I mean, this is just insane. Like, they're just scooping up. These companies are just scooping up everything. Oh, Monopoly's great, bro. I love monopolies. Why do I only get 30% of my super chats? Net income was $27 billion, increasing 12%. So they probably took another hit on taxes, just like the rest of them. And diluted earnings per share increased 13%. Non-GAAP results exclude the impact from investments in OpenAI. Explained to the non-GAAP definition below. Our planet-scale cloud and AI factory, together with co-pilots, is driving broad diffusion and real-world impact. Planet scale. Sounds like Star Wars. It's why we continue to increase our investments in AI across both capital and talent to meet the massive opportunity ahead. All right. How much are they doing in capital expenditures? All right, business, we'll find it eventually. Microsoft Cloud revenue increased 26% to $49 billion, and remaining obligations increased 51% to $392 billion. So wow, they're getting a lot of contracts for cloud. Revenue and productivity and business processes was $33 billion, increasing 17%. Microsoft 365 commercial cloud revenue increased 17%. Consumer cloud increased 26%. Oh, Google's cloud grew faster, bro. LinkedIn revenue increased 10%. Who pays LinkedIn? Seriously. Why are you paying for LinkedIn? It's the stupidest website in the planet. Bunch of corporate slaves posting nonsense. I'm so amazing. Loser. If you're posting on LinkedIn unironically, you're a loser. Dynamics 365 revenue increased 18%. Okay, so solid revenue growth everywhere except for LinkedIn. But even that's okay, 10%. Revenue in Intelligent Cloud increased 28%. Azure and other cloud services revenue increased 40%. And revenue in more personal computing increased 4%. Oh, look at Xbox here. Xbox increased 1%. That's cute. Let's see. Microsoft returned $10.7 billion to shareholders in dividends and share buybacks in the first quarter of fiscal year 2026. All right, let's see. They'll provide forward-looking guidance and connection on the actual webcast. I'm not watching the freaking webcast. I don't have time for that. I want to see their capital expenditures. Yeah, people are throwing money at cloud, man. Like performance obligations increased 51%. Where's capital expenditures? Actually, let's look at R&D. Yeah, R&D didn't really go up that much. It's probably mostly going to the balance sheet. Let's see. Property, plant, equipment. Yeah, it's up about, 15% in the course of... They increased their property, plant, equipment 15% in 3 months. $230 billion of property, plant, and equipment. I like how they bold this. This is actually nice. So you don't get freaking confused. I like it. They actually paid off debt. Their long-term debt dropped by about $5 billion. Long-term unearned revenue didn't really go up that much, but all right, let's go look at the cash flow statement. Okay, net cash from operations was $45 billion. So that's an increase of 32% year over year. Why is this cash flow statement backwards? It's supposed to be operating, then it's supposed to be investing, then it's supposed to be financing. All right, so they spent almost $20 billion on property, plant, and equipment. So they're roughly spending the same as Meta, at least in this quarter. $19 billion. That's an increase from $14 billion last year. $578 million on acquisitions. Nothing crazy there. Spent $5.6 billion buying back stock. They're paying more dividends than stock buybacks, at least in this quarter. They spent $6.1 billion on dividends and only $5.6 billion on buybacks. Interesting. So overall, pretty solid quarter. I mean, I guess we'll see. I don't know necessarily why it sold off. I guess maybe they missed on something that Wall Street was expecting, bro. But I don't think the bull thesis has gone away. They're plowing money into capital expenditures, and they have plenty of cash flow to afford it. Okay. You just better hope it pans out. All right, so that's Meta, Google, and Microsoft. All great earnings. All good. Okay. All amazing. All right, let's do some quick comments and we'll close this out. Looks like your top holdings are getting hit hard. Oh, I'm such an idiot. I'm such an idiot. Oh my God, it's over for me, bro. Clearly the market is efficient, bro. You people exhaust me. Short everything, guys. I think I figured it out. Where's Gil? Usually my comment section is freaking exploded. What's up, Dex? How's it going, man? Ryu. I got a lot of trolls in my comments today. Is it Jeremy? Are you mad that I'm making shorts, making fun of you? You're such a loser, Jeremy. I hate you. Hey, pigs. What's up, bro? Exactly. Let's see. Someone said they were in a Russian prison. Alan, fine. I'll send you a dong. I'll send you a picture of a dong in response to your email. What a waste of time. What a waste of time. Better check your spelling there, bro. A lot of brokies in the chat tonight. Yeah, we got a lot of trolls in the chat. I think somebody's getting butthurt that all my hilarious freaking shorts that I've been putting up. Why do this entire thing if you're never going to? I buy these stocks all the time, bro. What are you talking about? You're acting like I don't own all of these companies. It's called the magic of index and fund investing. Just because it's in the wrapper of an ETF doesn't mean I'm invested in them, not invested in them, okay? I own all of these companies. Wow. Huh? What? You do? I thought VT was a company. Waste. There you go, boy. You never bought any stocks? I don't have to. Oh, you gotta directly own it, bro. You can't buy an ETF. That's not What a clown. Paper ETF. All right, well, that's it for all your stupid clownish comments. We got 2 more videos to get through. Anyway, like, subscribe both to my Facebook page. It's SMPF, but I will change it to Strongman Personal Finance. Also, check out my X account. It's called Strongman Personal Finance. Follow me on X. Like and subscribe to my YouTube channel. And also consider booking a free 30-minute tax consultation. I am a certified public accountant and would gladly do your business and personal taxes. Any state in the United States, you can talk to me for free. I give you upfront fixed quotes for your tax preparation, and I will do your taxes like a boss. Stand by for the next video. Cheers!